Hello and welcome, ladies and gentlemen. I'm Sumita Kareer and you're watching Rush Hour on ET Now, where we get you the day's top stories, the day's top highlights over the next 30 minutes. And beginning with our tops focus this hour, China. While relative valuations in Indian stocks are less extreme than in October, while investor confidence in China is fragile. India is leveraging a multipolar world, while China's relations with the United States are strained. Morgan Stanley downgrades China, so it's advantage India. Well, to discuss that and more further, we're now joined by Geoff Dennis, Independent Emerging Markets Commentator. Thank you very much, Geoff, for joining us this evening on ET Now. What really explains the recent rally in Chinese shares, especially as Morgan Stanley has downgraded China to equal weight? Is that sustainable, and how much room there is for Chinese equities?
Well, China has had a very poor year, in fact, in terms of 2023. It's only up very slightly compared to EM, which is up 7%. I mean, EM's not up a great deal, but the more recent bounce you've had until, frankly, the last 2 days when global equities have sold off, it's really been down to optimism that there would be more action by the Chinese government to support the economy, particularly consumer spending and also the property sector. But so far, we haven't seen much, and also we've heard that these stories many times before. You're going to get a big package to support the economy. So I think the Morgan Stanley downgrade is probably sheer frustration over the fact that you're not getting enough government action, and also even if you do get some government action, the economy is still not growing that strongly post the exit from the zero COVID policy.
Right, Geoff. So like you rightly stated, there's been a lot of talk around the recent stimulus and, in fact, the rhetoric by the government as well, which has been speaking of, positive growth over the next couple of months after its stimulus. But that clearly falls short, right? So what gaps does the government now need to fill in to restore investor confidence?
Well, I think you've got to look at it in two ways. First of all, you really do need to see to really restore investor confidence in China long term, you've got to see some sort of end to the US-China, should we say, spat, should we say, fight over access to sensitive technology and sensitive materials that are needed for the development of green energy, et cetera, et cetera. I think everybody expected that once President Trump left office and replaced by President Biden, those economic relations would improve. And frankly, they haven't done so. And it was the fact that you've had a lot of attacks, so to speak, by the Chinese government on various sectors in the market, and you've had some of which seem to have ended now, and you've had also a situation where it's being very hard for certain US companies to invest in China, Chinese companies to invest in the United States, certain Chinese companies being blacklisted in terms of ability of US pension funds and investment funds to invest in China. You need some sort of better resolution of all of those things, I think, to kind of end this idea that China is uninvestable, which I don't believe it is uninvestable. That's one thing. But the other thing you need, the really fundamental issues that are holding China back now in terms of economic growth, although it may well still grow 5% this year, are weak consumer spending because of a lack of confidence, a very, very high savings ratio, and a disastrous situation in the property sector with a number of companies effectively going bankrupt, and the situation which your viewers will know very well. They'll have heard this story, which is a lot of properties which have been sold to the Chinese population, but have not yet even been finished. And so those are the two macro issues. And we need a resolution on certainly some of those many issues I've raised here before I think people will really want to plunge back into the market. Can I say one other thing as well? And that is that although Chinese equities are relatively cheap, they're not super cheap within an emerging market environment. I think the people who want to buy Chinese equities for the long term, and I think the Morgan Stanley call is probably more of a short to medium term call, are the people who believe in the long-term growth prospects of the Chinese economy. And frankly, we've had a lot of doubt about that lately, and I think that needs to be resolved.
Right. So you are stating that there has to be better resolution of not just domestic concerns, but also geopolitical concerns with respect to the United States. But, Geoff, speaking of China, once again, I'll move to the India aspect as well. Speaking of China, what does the government now really need to do in order to sort of restore investor sentiment? Now, this is a point that I also brought up a little while back. And how soon is a sustainable recovery possible?
As I say, I think the two things are, first of all, to really inject some money into the property sector to ensure that we come to an end of these property company effective bankruptcies. That's one point. And to try, and this will take a long time, I think, try to eliminate this extraordinary overhang of properties that have been built that have either been sold but not finished, or built and not sold at all. And that's going to take some time, because arguably the property sector is in a very dangerous balance sheet recession situation. So I think that's the long-term challenge. And then the short-term challenge is to get the consumer to take their money out of the bank or wherever they're holding it, and to get consumer spending stimulated, because the savings ratio is very high. And I think that's going to need a better vision from the Chinese government on the long-term growth prospects, because frankly, people are very nervous, and therefore a lot of consumers are going to want to simply hold on to their savings until they see this thing resolved. One more thing, if I may say so, a lot of people in China have been wanting to rely on an export recovery. And I think one thing they could do to support exports would be a lower renminbi, which itself would be a challenge, but would be controversial. But there are a lot of challenges here facing the Chinese government, and those would be the three areas I would highlight.
Right. So, Geoff, one last question before we let you go. I was speaking about the India factor. Clearly, this is advantage India, and India has been given an upgrade by Morgan Stanley. And of course, this also coincides with the fact that a Fitch downgrade happened just yesterday for the United States.
Yeah, well, that's a separate big issue, frankly. I agree with the Fitch downgrade. A lot of people don't. You could always talk about timing here. The US fiscal situation, frankly, is very, very poor, and they don't deserve a AAA rating as far as I'm concerned. And the reason it's had such a dramatic effect, I think, on the global markets is because it gave everybody an excuse to take some profits after a very, very good run. Apart from the fact it's pushed up long-term yields, it doesn't mean the US fiscal situation is about to go into crisis. But I think it was a good long-term move by Fitch, frankly, and I don't think people are in agreement with me on that, but that's my view. As far as India is concerned, it is advantage India. I think more and more people want to invest in India on the back of not just the global situation, but also in particular what's going on in China. I think the thing we've got to be real careful about, though, with India is valuations always get a little stretched, but the economy is growing strongly. And I think a lot of the long-term money that would have previously gone into China is probably now going into India, even though I think China will do perfectly well over the long term. But frankly, in the short term, I kind of agree with what Morgan Stanley's done here. This is definitely advantage India.
Right, Geoff. So it is certainly advantage India, as India leverages its ability to carve a niche for itself in the multipolar world dynamics. On that note, thank you very much, Geoff, for joining us this evening.